Hey guys, this is Baraf here. Welcome to today's Q&A. So I only see there's only one question. So today is 17th October 2020. There's about 2 weeks left for the elections, and we should see volatility picking up. Although it's kind of up and down, but mostly headed up. The S&P 500, that is. So the one question that we had was from. So let me just share my screen. Was from Shadowborn. Question for Q&A, Shifu, how come you did not sell calls on Friday and capitalize them over the weekend? It's a good question. So let me just take a minute to answer this. And there are no other questions, so this will be the only question. And then there's also nobody else in the meeting. So, guys, like this is your time. I'm probably going to say this for one last time before I decide to, not do this. Um, Okay, so there's Dennis who's just joined the meeting. Hey, Dennis.
Hey, hi, Baraf.
Hey, hi. So it
Hi.
looks like it's me and you again. I was just like halfway talking because there was just one question, so I thought it's going to be a quick video. Anyway, the question I don't know if you saw, but somebody posted it on the weekly calls channel. So the question was, how come I did not sell calls on Friday to capitalize the theta decay over the weekend. So specifically, um, so this is a good question. Basically, because ideally, what we want to be doing is to sell options and capture as much premium as possible. But given the fact that I bought in at such a high price and it's trading pretty low, and also that there's no premium in the options right now. So if you look at next week options, I really wanted to sell some options, but there really wasn't any premium. So if you see next week options, even say like 18 and a half is only like 60 cents. So the risk reward just doesn't make sense for me because my average or rather effective buying price is around 20 plus, just over 20. So I would not. There's no way I want to sell my shares at 18. But of course, for some of you guys, because you started later or you bought it a lot cheaper, so if your average buying in price or effective buying price minus off the option premium that you've already generated is close to 18, 17, or where it's trading at right now, so then that still makes sense for you because you're not selling it at a loss, and I mean it's at least a small profit that you're going to book. And ideally, it should also not be your entire portfolio of the shares that you're holding. So if let's say you have 1,000 shares, maybe you want to sell two, three, because you don't know, right? We are getting closer and closer to 4th November. Like I had said earlier, the general trend until the voting happens and until they start getting results from the polls is basically going to be like a blind move up, which is basically what they want to move, irrespective of whether Biden wins or John wins or whoever wins. They want to get the public on their side, and so all the policymakers and everybody else is just going to drive the stock markets up. And in between, there are going to be places like, so for example, on that one day last week when UVXY shot up, so I managed to sell about 33% of my shares that I'm holding, as in sold calls against them, and I got a pretty decent premium. So I sold it at about 120 for 20 calls.
Hmm.
So 20 I'm okay because it's just about break even for me. Adding the call premium, I would actually make a small profit
Hmm.
for the specifically those number of shares that will be called off if at all that happens. But overall, I'm still negative on this position as a whole because it's a huge um, like sum of money and the number of shares that I'm holding. And given that I started very early on for specifically UVXY, So my VXX portfolio is fine. So I'm just not doing anything with it, just holding on to it. And so that is basically the idea. So if like as much as the general strategy is to generate as much premium, it will also make sense that you kind of figure out the environment and the surroundings you're in, and if it makes sense for your holdings, then you would want to sell it also. And like I said, and I've said before, I wouldn't want to sell any more than 2 weeks. So 2 weeks is the latest that I want to do. So even that the calls that I have right now, I'm probably not gonna hold it until expiry. So if um, UVXY stays flat or goes down in the next few days, probably just book like profits or close it partially, because ideally the whole point of the structuring the trade this way was to capitalize on the upside. So just for a dessert, you don't want to give away the entire course of the entire meal, right? So so that granted, like I said, you've got to be prepared to see red for quite a while in this before you can start seeing green. But then again, if like volatility picks up and if the VIX futures are above 30, then I think there's a decent premium in the volatility ETFs. So there shouldn't be a problem. We should be able to generate at least $1 a week. So that is overview of what you should be doing and what you should look out for, and specifically why I did not sell any options on Friday. But if it only went up like I waited until like two plus almost close to three, and nothing really happened, and in the end it kind of went up. So but if there was like a decent move up, then I would have sold it, because you never know, right? Like maybe weekend something happened and then it shoots up $2, then you're already looking at assignment for a mere 40-50 cents. So that's the
I've been on the when it was up. I've been closing some of my. I've been taking profits lah, basically, on some of
yeah.
the other stocks. I mean, not pertaining to the strategy that we have, but
Yeah. So for equities, I think we're almost at the all-time high. So I'll probably wait another week or 10 days, and I'm also going to be outlining like I think certain other things that I think we discussed privately on your consult. Like for example, if just before the elections S&P is at an all-time high, then we could also consider buying some S&P put options like far out of the money, and the open interest is so high for all these options.
I did
And
that.
maybe like a small percentage of your portfolio that way. But ideally everything is structured towards a long volatility trade, so in whichever way that is structured. So that is what is going forward, and there's nothing else really. I mean, the way I trade, or rather, not really looking at news actively. So whatever happens, and then space trade base of the numbers. But I think it would make sense to pay some attention towards the polling and everything, and see if you can make any sense of it, or probably with the futures there might be some opportunities to kind of capitalize. But again, that is more for an advanced trader. So for somebody basic who's just started with options, or who's mostly just doing equities, I think what we're doing now, the exposure with options is good enough. So yeah but either way you'd want to be cautious going in to the markets or approaching the markets the next few months,
Yeah.
because
Okay.
it can be very volatile, and it can um, potentially move up and down a lot.
Hey, Bharat.
Hey Putvish.
I just wanted to ask you one thing. Like, I
Sure.
was just looking at the UVXY charts for like the last 5 years.
Right.
Uh, uh, so, like during the 2016 elections, it was at really high price, right? Like it's around like $15,000 or $16,000 per share. Like, will it ever get to that price again? Like, is there a possibility?
No. So So the problem with looking at these VIX ETFs on a longer scale, right, is the fact that these instruments are basically designed to depreciate over the long term. So if you look at like the all-time high, it's probably like a few billion, right? So if you
Yeah.
look at the 20-year chart, so I'm just gonna share my screen. So it makes sense of what I'm talking. So this is the 20-year chart for UVXY. So if you look at the chart, the all-time high, which was back in 20 whatever 10, is I don't know 50. So this is probably 2.4 billion or 24 billion.
Yeah.
But we were never going to be able to get to this place because that basically means that the volatility has to go up like maybe 1,000x as to where we are right now. So that means volatility shooting up from 20 to maybe 2,000, which is just not possible. And the reason this happens again, like I said, the way this is structured is because these ETFs are tied to the VIX futures, and there are these terms like contango and backwardation, so which are basically designed for these ETFs to eventually, like in the long run, go down. So that is why you'd see that. So something to look at would be what has happened recently. Maybe only like a 2-year chart would give you some kind of idea on what levels it could possibly reach. So I think this um, 2018 correction or 2017 correction is probably what we can look at. And the rest of it, this down move is basically happening because of the nature of the product itself. So which is why it's crucial that if you're holding this, there should be a way that you can cover these losses. So which is why we do the covered call. And again, I do not suggest like holding this for like 2 years, 3 years, or whatever. It's because that there is this scenario of the U.S. elections and we are at all-time high and all those things adding up. It just makes sense right now. And yeah, so in another, I think average is around at least 6 months to a year before you see a correction. So this is ideally what we're looking at. And yeah, so that should be, and this is similar for any VIX ETF that is designed this way. So even in fact, if you look at VXX, okay, VXX does not have a longer history. So any other ones like I think even VIXY is also the same thing, right? So if you go back to 2011, it was trading at 12,000 something. So will it ever go back there? I don't think so. But then again, also these products have been reverse split a lot of times. So meaning to say that these are basically readjusted, so it shows a higher number trading, but it's not really that number. So I think you can look it up later. So for example, VXX has been reverse split 5 times, 4:1, 4:1. So even though VXX, as you see today, is trading at um, sorry, 25
Endings.
something,
Yeah.
uh, its non-adjusted value, if let's say it wasn't reverse split, is probably something like 0.01 or 0.02. So it's basically the current price of VXX, which is 22 divided by 4 times 4 to the power of 5, because that is how
Okay.
many times it's been reverse split. So
Okay.
that is just the nature of the product. So and anyway, yeah, this is a short-term strategy. So the most recent one would be what would make sense. And I think the other figure also to look at closely would be the VIX futures, which is slash VX. So if you can see, yeah, so ideally this will correspond to what the move is with VXX and UVXY. And so if you've noticed, yeah, when this basically came down, so you can see that there is still some room for the VIX futures to come down, but I don't see it being a possibility given that there are less than 2 weeks left for the
Election.
voting to begin and everything. So there's a small uh, downside here. So probably then like what was 15, 16 weeks like 3 years ago is now like probably 21, 22 already. So this is somewhere, yeah, where it will be, and I'm expecting it to go up to 40, 50. Yeah, so this is, so the older, I guess, support was here back down at 12, 15, and then 20. But I guess that has changed to 20, 30, and yeah, 30 plus now. So yeah, short answer, no, but you just want to look at the last 1 or 2 years chart and nothing more, because it's just the way these products are structured.
Okay, got it.
Yeah. And yeah, so ideally there are also like other things that you can do. If let's say you have a considerable um, position in VXX or UVXY, then I mean, needless to say, if you're looking at a big current open profit loss, I mean, meaning that you're looking at a negative P&L. And if you want to say buy a hedge, then the obvious hedge would be to maybe purchase some S&P, or be long equity, or purchase some S&P calls in the short term. So that again, I would not advise for like a um, for somebody who wants who doesn't want to expose himself or herself to additional risk, right? So you'll have to manage additional positions. Hedges are like a cost basically. So yeah, I mean, if the position is going against you severely, then there are things that you could do, but religiously doing covered call should be able to solve, right? Because I think from the time I started posting this, I think most of you started buying it at say 2021, as against me, where in the Google sheet I've bought at 30, 30 plus. So even so, yeah, I'm almost at $20 now, my effective buying price. So a few more decent volatility days where I can sell options and get some premium, then yeah, I should go into the sub 20 region already. So plus I'm gonna have another 1,000 shares assigned to me this weekend. So overall I'm gonna have like 3,600 shares of just UVXY. So almost, yeah, close to 80K. So yeah, that's basically the thing. So with more shares, yeah, I'll be able to generate more premium as well. Yeah, and plus the swing is also going to be like huge. So that means if UVXY goes down like $1 today, then I'm looking at a minus 3.6K that day, or if it goes up $1, it's going to be plus 3.6K. So yeah, it's just, yeah, matter of mindset and understanding that, yeah, it's not going to be an immediate profit, but you'll have to be patient with this.
Got it.
Yeah. So yeah, that is. So if you do you guys have any other questions? So there was only one other question that I did address just before you joined the meeting, Prithvish. So which was why didn't I sell any options on Friday? So maybe when I post the recording, you can have a listen to it and understand why I did or did not do a particular thing. So there were no other questions posted on Discord, and yeah, the two of you are the only people on the meeting. So yeah, if you guys have any other questions, then I'm here to answer them.
All right, the last couple of days, the smart forecast was a little late, huh? Or is it?
Uh, yeah, so I've been trying to work on that. So I'm trying to find a way to automatically have an integration to post it when like it's generated from the Google Sheet onto the Discord, but that hasn't been working yet, so I have to manually do it. And if I'm outside, like even if I'm at like the Kupitiam coming back, the algo cannot run on my phone. So even though I have access to my internet, I need my laptop. So I think there were a couple of days where I was like either just outside or went to pick up something, and then yeah. So, but I'm trying and working on it. So if it is all automated, then ideally the algo takes about 6-7 minutes to run. So if I'm on my computer, it should be posted by 9:45. So yeah, but if it's automated, then yeah, you'll definitely have it in 7 to 8 minutes. And yeah, there were also a couple of issues last week because Monday was Labor Day, so it is supposed to be a public holiday, but the stock markets were still trading. So since I get my data from Yahoo Finance, and Yahoo Finance declared that as a holiday, so the algo had some issue. So it was the pre-market forecast for the next day. So it actually skipped
Yeah,
the day.
it
Yeah.
was like a bank holiday, but the trading was still going on. Like it's probably like Columbus Day or something.
Oh yeah. Sorry,
Yeah,
yeah.
Columbus
It
Day.
was some public holiday, and then so I only
Yeah.
figured that out later. So I thought it was a holiday as well, and then I didn't open my trading account because the algo pulls data from Yahoo Finance directly. So I'm not using any premium services. It's like those free APIs that you can connect and get the data. So yeah, so the yeah, I expect a little bit of um, delay the in like maybe a week or two until like everything is set up and stabilizes. Then we should not have any issues. And also, like I said, that PDF will be posted really soon. I'm working on it, and things have just um, gotten busy. And but yeah, there's no excuse. So I'll be posting it really soon, and should have a better idea of how to be using those numbers. And yeah, so either way, it's going to be all text. And then once I have just moved to my new house, so I still have not set up. So if you see, I don't know if you can see, but this if I remove this virtual background, so yeah, you're going to see all like suitcases and stuff. So
Yeah.
it's pretty bad. So yeah, probably in a couple of weeks I'll be able to settle and set up everything. And yeah, and then things will be smoother going forward. Probably around a week. So yeah, that's about the update from me. And yeah, if there's anything else, yeah, as always, Discord, Facebook, or yeah, an emergency Zoom meeting will be a good way to get things sorted out. So yeah, if there's nothing else, then I guess it would be that's all for today. And yeah, take care, guys. So I think it's less than 100 cases in Singapore, but Prithvish is in the US. But yeah, for us, could probably be looking at some more relaxation in measures, so which would probably make life easier. Like probably without wearing a mask. I'm hoping, yeah, by end of this year we'll get there. So yeah, let's see. And yeah, if it gets better, then the economy picking up and everything else should be a good sign for for humans in general. Yeah. Anyway, yeah. So that's about it. Take care, guys, and I'll talk to you on Discord. Yeah. See
Okay,
you.
bye bye.
Bye.
Thank you. Bye.
Thanks.